Hey everybody, welcome to the first episode of Stock Market Saturdays. And we are going to be going over European ETFs that I have been researching. The agenda, really quickly, is an introduction of why I'm doing this, the pros and cons of investing in the European markets. Then I'm going to be discussing the different ETFs that I have done through my personal research, and then top contenders for my 2026. Nobody else's, but at the end, I'm just going to say what I'm thinking about, not to suggest that that's what you need to do, but it's just what I'm thinking about. And then final tips and takeaways. So really quickly, this video is not financial advice. This is an overview of my research from my investing goals that I share with you on my YouTube community, that has a common interest of investing into the stock market. And lately, I have been thinking about what I'm going to focus on in 2026. And I'm taking this time, because we're in the latter half, to figure out what I want to do and be prepared. So this is my researching time. Some more information is that this is my first year of investing, as far as investing on my own in a non-retirement way, other than a 401k. I would prefer not to touch it until I get to that time, but this is something that doesn't have penalties if I take it out. And I'm just trying to grow this account to 100K as quick as possible. And right now I'm at 2.5. Now, I will say that I do see a downward trend, at least in American markets. And that is why I decided to be a little bit proactive. However, I think I'm probably too late, because when I watch some snippets on CNBC, people are talking about this already, that they are venturing into other markets because the American one is seeming a little bit too unstable and volatile for them. And there are other places in the world that are growing. So I'm not the only person thinking about this. I'm probably too late, but my budget only goes so far. I only invest $30 a week. So, I mean, that's all I can do right now. But I'm hoping if I don't get it at the bottom, I'm still not nowhere. That's bad English, but I'm not anywhere near the top. That's all that matters to me. So hopefully it stays good until the next, for at least 6 months or so. And diversification is needed in my portfolio. I am like 95% in American markets, which is fine. I'm from America. Ain't nothing wrong with that. And America has historically been strong the last 100 years, I would say. But I need to diversify. And 2026 is about diversification. I'm also looking into crypto. That will, God willing, 2026 will be the first year I do that. And I'm also looking into investing into gold. And then foreign market investing is essential in order to keep up with what I want to do, that I just aforementioned. 2026 goal is to invest in several foreign markets. The first video that I'm talking about right now is Europe. I'm going to be going over Africa, Asia, South America, and anything else that I can think of. But first up is Europe. Some of these things I already talked about. So what are the pros? And then the next thing are going to be cons, because nothing is perfect. When I was a healthcare provider, it used to be risk versus benefit ratio. In healthcare, I don't know if you'll hear your doctor, your nurse practitioner, your pharmacist talk about that. Nothing is set in stone, but you always want to make sure whatever you're doing, the benefits outweigh the risks, nothing is risk-free, but we do what we do in medicine, hoping that it's more beneficial than risky. And I have translated that into my investing strategy as well. So the pros of European market investing is they are very keen on clean energy and green transitions. America had a spat where it was looking like we was into that, but we do not care about that at the moment. But through my research, I have found that they are planning to add 500,000 new jobs relatively soon in the near future, and they're betting more on green energy than America. And again, disclaimer, this is my research. I am not a financial professional, so this is not financial advice. This is just my research that I'm sharing with anybody in my YouTube community who cares to listen. And I thank you all who are around listening. If you're new, welcome. And if you've been here from day one, I appreciate you guys so much. Also, please like this video. I need that. Another con in investing into the European stock market is that they are leaning into artificial intelligence and automation infrastructure. A lot of those countries are developed, so automation caught me off guard, but maybe they're just leaning into it more. I feel like maybe America is more automated. Again, as an American, we tend to be American centered, and Europeans don't like that, and I understand that. I'm thinking as an American that's already there, but maybe it's not. But okay, I like that they're leading into artificial intelligence because that's going to keep them current, and the automation infrastructure seemed like a good thing to me as well. And then they also have smaller markets emerging, and those markets are Greece, Czechia, and Poland. Those are more so on the eastern part of the continent. And I do remember hearing like 15 years ago, Greece is in trouble. More or less 15 years ago, I would say, and I didn't hear anything back. So it's looking like they are on the other side of that, and they are seizing the opportunity to actually capitalize and do better than they were in the past. So that's awesome. I want to get in on that. And then the bottom, I don't know if you can see, but it says defense commitment. They are committed to upping their defense ability. And then I put underneath it, there are geopolitical recent history concerns that validate them doing that. Like for them, it's necessary. So there are markets that I can invest in right now where I can, capitalize off of it. So those are the pros. Now the cons are tariffs. America is not the only ones dealing with tariffs. Apparently Europe is too. So Europe has large export heavy industries, specifically automotive and steel. They do make a lot of cars, and steel, I've been reading in a lot of articles, is necessary for a lot of things that we do here in Miami, in America. And I know there's been a tussle between the two governments, or the many governments, between the many governments of Europe and America. So that's something that I have to take into account, because tariffs are making everything volatile. Also, they are facing decreased productivity, and therefore they're not expected to grow as much. I don't know who they're comparing it to. I don't know if they're comparing it to America, because I don't know if we can be considered as growing as much anymore. Maybe, but I don't know. But I did see in my research that they are concerned about their ability to be productive and see high amounts of growth. And then also Europe has a high debt load. So America's not the only one. I feel like America has more, but apparently these governments don't believe in paying off their debt. And it's weird because at least in America, they're like, oh, pay off your student loans. Y'all got a lot of debt too. And y'all not paying it off. Y'all just kicking the can down the road. So those are some cons that I have seen. And I got to take that into account. Now I'm going to go shortly into discussing the European market ETFs that I have found. And an ETF, shortly said, is a basket of stocks. That's how I like to explain this to people who don't know what those are. So the first one is has a ticker SPEU, and which stands for SPDR Portfolio Europe ETF. It is currently sitting around $47 per share, and it is based on the Stocks Europe TMI, which has broad representation of Europe's stock market across 17 countries. And was something that I saw of note that I decided to put on notes is that it has a mix of small, mid, and large cap companies. So I see that as very diverse and safer, because small is more volatile, large is already just established, right? There's not much growth you can get from a large company. Their dividend yield is 2.75% quarterly. And mind you, I am a heavy dividend yield investor. And by that, I mean, I want my dividend yield to be as high as possible. I know the safest is between 2.5 and 3. And what I can expect is 2.5 to probably 4.5. So 2.75 is not bad. Their dividend growth is 10.38%. Year to date, they are doing really well. 26.36%. And that's as of today, yesterday, which was August 15th. When I first started doing research a month ago, it was 20%. So it's like, this is good. And this is what I mean by I'm probably already too late to the party. This ETF was started in 2002. So it's 20 something years old. As far as diversity, it appears diverse. And when I say appears diverse, this is something that I'm going to be learning about. And that's why I said it appears diverse, but I don't know everything. The number one thing that it is invested, it is in banking, and I'll go really quick. This next slide shows everything, like its sector allocation, and financials is almost 24%. That's why I put back here that it is banking. Financials, I'm just going to say banking. And then industrials is second, healthcare is third. 5-year growth is 51%, max 91% since it started in 2002, and it has $290 million in total assets. The second one is VGK, that's its ticker, and it is called Vanguard FTSE European ETF, and currently is sitting at $78. Of note, I put that it tracks European company stocks that are mostly FTSE developed European all cap index. So all cap again means small, mid, and large, and it follows major European countries. I put major as underlined because I interpret that to be England, France, Germany, and Italy. Italy, I would think Italy, but I'm not educated enough to say for sure Italy, but I'm pretty sure England, France, and Germany. Dividend yield is a little bit higher, 2.96, and that's done quarterly. Dividend growth is 8.4, and year to date, this is 24.28%. And again, that has grown. It was about 20%. PE ratio is 16.6%, and I forgot to put that in the first one, but that's a good PE ratio. Like that means it's kind of safe, because I think, let me look up real quick. Pardon me. I'm going to type in, what is the Dow Jones PE ratio? I'm going to put, the computer automatically said today, 22.78. And from what I've learned, you want the PE ratio to be similar to the market that it's in. And I'm going to compare, at this moment, I'm going to compare everything to the American market because I'm American, and 16.6 is not too far from 22. I would be nervous if it was like 80 or 60. That means it's too expensive. But 16.6 tells me that it's probably priced right. This one was started in 2005. That's when I graduated high school. That's crazy. Diversity, it appears diverse. This one also has its number one allocation in banking. I'll show the graph here. It's banking, industrial second, healthcare third, and then smaller ones go to consumer staples, consumer discretionary. I don't know what that means. Tech is not high. It's only 8%. So that was interesting. 5-year growth, 43%, max 52.02%, and it has a total asset of 26 billion. So much more than the first one that I had. What else? Let's see. Let's go to the third one, which has a ticker of IEUR, which stands for iShares Core MSCI European ETF. It currently is costing around $67. This one tracks returns of MSCI European IMI, more involved with Western European countries, large and small. Dividend yield is 3%, but this is paid out semi-annually. Dividend growth is 12.46%. Year to date is 24.42%. And again, when I started this research, it was 20. So I'm seeing the trend that between a month, it's gone up. And that's awesome. And again, I hope I'm not too late, because what are the chances that in 2026, it'll grow another 25%? I don't know. Hope I'm not too late to the party. But the PE ratio is 16.55. I feel like that's a pretty good number. That doesn't scare me. This one started a little bit later in 2014. It appears diverse as far as diversity is concerned. It is also number one in banking. Banking is its number one allocation. 5 years after five, it's 5 years. 5 year growth is almost 45%. Max is 32%, and total assets is 6.78 billion. That's a large number. Wouldn't be nice. This is the sector allocation. Number 4 is JP Morgan. Beta Builders Europe has a ticker BBEU. It's costing around $68. And again, I will say the 5 that I'm looking for all are under $150 because that is my budget. You know, although I'm a dividend focused investor, I also believe going in low, not to sell high, but the old saying is buy low, sell high. And I want some movement to have some growth. So this ETF tracks returns of the Morningstar developed target market exposure index of the stock market. And it has 80% of equities in these in like Europe. And it is more involved in Western European countries. The dividend yield is 3.58% and it pays out quarterly. Growth is 35% of the dividend. Year to date, 23.87. Again, when I started, it was 20, so it's almost at 25%. PE ratio is comfortable for me, 16.29, started in 2018. So this is the youngest so far. It appears diverse. Its number one holding type is in banking. 5-year growth is 43%. Max is 36% pretty much. And then it has $4.13 billion in assets. And then it looks like typically in Europe, it's financials, industrials, and healthcare. And tech is pretty much, tends to be over here. It's not a lot. It's like less than 10%. And then the last one is called Wisdom Tree Europe Small Cap Dividend Fund. And it has a ticker DFE and it's around $70. It tracks Wisdom Tree European Small Cap Dividend Index. 95% of equities are into that. And small cap businesses or corporations are key in this ETF, which I thought was interesting and different. So the dividend yield is 4.31% quarterly. That makes sense because small cap is more risky. So you get higher dividends is how I'm interpreting it. Dividend growth is 24.45. That seems like a lot. But again, I'm guessing that this is more volatile of ETF than the others. Year to date is growing almost 25%. Again, it was 20% when I checked in a year. So there's a lot of growth going on in Europe, which is awesome. The PE ratio is 12.36. So this one might be a little underpriced. That's how I interpret that. I don't know though. I'm not European. Started in 2006. This is an older one. So let's see how the growth is. The growth max is not that much, 38.6%. 5 years, 31%. And this one is less diverse. And this one is the only one that has its number one holding type in industrials. Every other one has been banking. I'll show you in the pie chart. Industrials number one, and then number two is financials. So that's different. I kind of like that it's a little bit different. And it has $177 million in total assets. So those are the 5. Now, I'm going to end these with saying these type of stock Saturdays, if I ever do something. Let me see if there's another slide. No. Okay. With my plan, this is my plan. Again, this is not financial advice, but this is where my head is right now. And I like to document like what I'm thinking. So I can't afford all 5. So I'm either going to have to pick 2 or 1. And I think if I had 2, I would pick SPEU and DFE. That is in the case that I had big money. Because I like DFE because that was the last one that I did. If you remember, it's small cap focused, which means there's room for growth, but there's also room for them to fail. That's the risk. The benefit is the growth. And then SPEU I liked. I think that was the first one because it's like the most stable, Like it gives you 2.75, which is not like amazing, but it's good because the worst is like 2.5. So I get a little bit more. And y'all know I just care about dividends. And also it's cheap. It's $47. It's the cheapest one. Everything else is like average 70, 80, 70, 70, 70. So those two would be the perfect for me, the perfect couple, because SPU is cheap, room for growth, and DFE not as cheap, but it had like higher dividend yields and higher room for like growth as well. Now, if I can only pick one, I'm gonna let go of DFE. I'm gonna let go of both of them and just do VGK. And I think VGK is a perfect one if I only had $1. And it's funny because it's from Vanguard, an American company. But I like that its dividend yield was close to 3. Point blank period. It seems safe. The PE ratio is pretty good, and so far it's 25% growth. Like if I had to pick one, I would pick that one, and that's probably what's gonna happen. But there's nothing wrong with having a plan A and a plan B. That's it so far for the first episode. Again, this was all about the European ETFs that I have been researching. I will be coming to you with the next foreign market. I don't know if it's Asia, I don't know if it's Africa, and I don't know if it's South America yet, but it will be one of those. But I do know that the next episode is probably going to be explaining dividends and how much we pay out on dividends, because that confuses me to this day. And when I'm confused about something, I just look it up. And once I look it up, I'm going to share it with y'all. So thank you guys so much for joining me, especially if you made it to the end. That means if you're not a subscriber, you need to go ahead and click on the bottom of this video that you want to subscribe. And also before you leave, go ahead and like this video. Please leave any comments, questions in the discussion, and I will see you guys next Stock Market Saturday.